FinCEN carries a big stick and is not afraid to use it. And it was certainly a signal for the Mexican financial institutions that obviously have dealings with the cartels.
I'm curious about your view on that occasion and how it will affect the banking world.
It's no longer only anti-money laundering enforcement, it becomes a geopolitical tool.
If we look forward for 3 years ahead, how do you see an AML team?
Well, the customers are faster and smarter, or the bad guys, than most compliance teams.
Have been working a lot in these highly exposed countries.
Right.
Have you ever been personally threatened?
The conversation evolves around, so if you know anti-money laundering, you know how to launder money too.
Welcome to the second episode of the Conductors, the AI Against Financial Crime podcast. And today we have Sven Stumbauer with us. Warm welcome to you, Sven. Thank you for being here.
Thank you for having me.
So Sven's been in financial crime since 2003. He's worked with 150 plus institutions in 60 countries. He's led major enforcement monitoring and now heads Americas at Forward Global. He's also the author of the book, The Next Wave of Global Anti-Money Laundering Enforcement. So quick question before we dig deep into the topics. Sure. How did you get into this field of financial crime or anti-financial crime more than 20 years ago?
I think like most people that get into this area, it was by accident.
That's exactly what the last guest told us, with the same word.
Look, my story was I graduated with an MBA. During my MBA, I did an internship with, back then it was called the NASD, now FINRA, the primary US regulator for broker-dealers. They offered me a job after my MBA. This is at the time post-US Patriot Act. FINRA is writing their own rules, and we in a meeting as the regulators, and our boss says, who knows anything about money laundering? And I go, what would you like to know? I grew up in Eastern Europe on both sides of the Iron Curtain, and I was here during the fall of the Berlin Wall. The answer was, congratulations, you're in charge of BD supervision for anti-money laundering. That was my first sort of exposure when the rules were new, when everybody was learning as they go. And yeah, it was very interesting being a regulator, seeing the Panama Papers before anybody else knew about Mossack Fonseca. And after a year and a half, I got recruited by the private sector and have been helping financial institutions as well as some governments around the world in this field.
Very exciting. You capitalized on your origins of being Eastern European. That's great. That's great. What's your best story that you can share from all of these years?
Best story or most interesting? There's lots of stories. One probably more to be on the subject was a situation in 2009. A bank in Guatemala appoints a new board member. The board member at one point gets killed while jogging. During his funeral, he releases a video. The video is still public on YouTube, where he's accusing the bank of being a bank for the cartels. He's naming the chairman of the board and the CEO as laundering money for the cartels, laundering money for corrupt politicians. Everything bad you can imagine is in this 20-minute video that's released by his family during the funeral, where he's predicting his death. It's the largest bank in the country.
Wow.
And it handles the majority of US dollar trades. And when I mean majority, I think at that point in time it was more than 90% of US dollar flows, and has relationships with all the big banks across the world. And now you have this situation, right? Your counterparty is now accused on, back then, only YouTube, because social media were sort of still forming. Right. And I said, we think we can help. We got an introduction for a friend, and a couple of days later, the CEO visited us in our offices and said, where do I sign? Because we do need help. And I spent with a team close to 2 years in Guatemala doing an independent investigation for the bank's board, because at the same time there was a United Nations investigation into the circumstances of the death. There was an Interpol investigation. And essentially, we help the bank better their compliance efforts. Our investigation didn't prove any of the allegations that were made in the video. We rebuilt the program, and the bank has been working very well ever since.
Amazing.
That is one of sort of the... When you start a client engagement with, and a board member got shot, you can imagine how my firm was looking at it at the time when Sven said, hey, I have a new client. Well, yeah, the client is on CNN and every major news outlet. Do we even want to be associated with this client? But in our line of work, yes, we do independent investigation. We help financial institutions, which is the more mundane part. But sometimes you're confronted with situations like this.
I fully agree with you. I think we need to, maybe even the institutions who have like worse background or are in a worse situation, they need the most help. So we cannot say, it's not even ethical to say no, in my opinion, to these kind of jobs.
Well, you know, then if you look at the big four accounting firms, and I grew up within one, they oftentimes fall in that trap of keeping the client and making sure the report says what the client wants to hear versus what is essentially an unbiased opinion. I oftentimes get hired with my team to provide an unbiased opinion in terms of, tell me, is it good, is it bad, or is it very bad, right? Because if I identify the problem as a member of the board, I can set a strategy to remediate the problem.
Do you know what happened with the murder investigation?
It's turned out there was a, let me see if I remember the facts correctly. So it was a staged murder.
Okay.
And it was related to a love triangle and coupled with a multi-million-dollar insurance fraud.
Something completely different.
Something completely different, because obviously the rumor spread. Somebody at the bank, somebody at the government hired assassins. And the video sort of supported it.
Okay.
Because the conclusion of the video, if memory serves me correctly, was, if you see this, I have been killed by the bank or friends of the bank for revealing those facts, right? And his facts were essentially nonsense.
You have been working a lot in these highly exposed countries.
Right.
Have you ever been personally threatened, or?
No, threatened not. A couple of times after conferences invited by strange individuals that said, my boss would like to talk to you. And sometimes we had a drink, and the conversation evolves around, so if you know anti-money laundering, you know how to launder money too. And, well, yes, sure. But, you know, the inside of a prison cell doesn't look too great, so let me stick with anti. But those kind of conversations more versus being threatened. Sometimes clients don't like our finding, depending on the level of sophistication of the client. But, you know, if the facts support our findings, then those are the facts. Whether you like it or not, it's sort of like going to the doctor, right? Eat less, drink less, etc. Will you always listen? Maybe, maybe not. Should you? Yes.
So speaking about South America and these kind of countries, lately the FinCEN cut 3 Mexican banks of the dollar. And it had a significant effect on these banks, especially on one of them, which has been liquidated since. So I'm curious about your view on that occasion and how it will affect the banking world.
Maybe take a step back, right? Because FinCEN now has, with the Fentanyl Act, additional powers under Section 311 of the Patriot Act, because historically 311 was invoked in terms of a notice of proposed rulemaking. That's how, for example, the second largest bank in Latvia was shut down in 2018. But the scheme is essentially the same. FinCEN will designate or provide a notice of proposed rulemaking to designate a financial institution, and it's basically a death sentence for the financial institution if you think about international payment flow. You will not have counterparties, you will become ultra-high risk, which was the end of the 3 financial institutions in Mexico, essentially. And look, what I think about it personally, FinCEN carries a big stick and is not afraid to use it. And it was certainly a signal for the Mexican financial institutions that obviously have dealings with the cartels, whether knowingly or unknowingly, and obviously have dealings with some countries that provide precursor chemicals to make fentanyl, whatever those precursor chemicals are. What I think about it from the owner's perspective, if I would be the bank owner, I would sue FinCEN, because what FinCEN provided in its determination was not too detailed, per se, but that requires a lot of intestinal fortitude to sue the US government. Banco de Andorra is a good example. The owners of Banco de Andorra, when there was the notice of proposed rulemaking under 311, sued FinCEN. And FinCEN withdrew the notice of proposed rulemaking. Ergo, there was no more basis for the lawsuit, but just being named in the notice was a death sentence for the bank.
Yeah, it's too late then already.
Yeah.
And which region is coming next? What do you anticipate?
Right now, the current administration is focused on the Americas and Asia Pacific, which puts Europe sort of right in the middle.
Yeah.
Because Europe likes to trade with both regions a lot. Right now, there's a new trade agreement between the European Union and Mexico, for example. That should be a warning sign for any financial institution that will engage in commerce with this country, whether with private actors or the current government in Mexico, that is not known for being the most progressive, and as you can see from the recent US action, even a governor of one of the states got recently indicted for his alleged association with cartels. So as European banks process more of those type of payments, the vigilance should also go up.
It's interesting to hear these stories because when Trump started this his second tenure, there were some news about him being less strict about some of anti-corruption and anti-money laundering rules. How does it connect with what we see happening right now?
I don't want to say less strict. I think the focus of the enforcement has shifted, right? First, the drug cartels in Mexico, Brazil, and other countries have been named terrorists, which gives the US government now much more resources in terms of intelligence gathering. Not only FinCEN, but all the other three-letter agencies can now focus on what used to be only cartels, now terrorists. So that gives the government much more intelligence. And the focus has been ex-US more than within the US. That's not to be said that bank regulators in the US are not enforcing anymore. They are. And there's been some significant actions for anti-money laundering compliance recently. But yeah, the focus is more outward looking. And it almost became that anti-money laundering becomes synonymous with national security. That is sort of the broad headline. That's why you have cartels becoming terrorists. And it's no longer only anti-money laundering enforcement, it becomes a geopolitical tool, right? If you turn off, for lack of a better word, or put out of business free financial institutions in a country, that sends a message, even though they might not have been systemically important. But look, there's nothing that would prevent the US government to essentially designate under 311 a systemically important financial institution of a country and de facto crash the economy, right?
Yeah, it's like a weapon on its own. Of course, in Europe, we are very much focused on the Ukraine war,
right,
unfortunately, for a while. And there has been a lot of debates about the sanctions, whether do they work or do they just cause like rerouting the financial flows. Looking back, we have it already for 4 years. What's your conclusion on that?
Look, sanctions work if the sanctions are enforced, right? What the European Union doesn't have is sort of the OFAC equivalent that the US Treasury has. OFAC is very focused on enforcing the sanctions, and they have a far reach globally. The European Union issues sanctions that need to be transferred into national law, and then the national authority need to do the enforcement. with the amount of countries in the EU, there's very little consistency, right? And if you think about it, level 1 issues the sanction, level 2 needs to implement and start enforcing. Wherever there's sanctions or something prohibited, there will be a black market, right? That's just the nature, because somebody else can make more money. If somebody within the European Commission thinks there's a shortage of Apple products in Moscow, I would say they're delusional, because yes, the sanction busting is a very profitable business. Yeah. So do they work? They work to an extent. Can people find ways to bypass them? Yeah, of course.
As we are speaking about European regulations, and you have mentioned that EU-wide regulation takes some time to be transferred to national law. But that's changing here with the AMLA from a certain perspective, and we have the AMLR coming, we have the new EU AML directive coming. So do you foresee this fundamentally changing how European banks are being regulated, and as a result, countering terrorist financing and money laundering?
In theory, yes, because you should have now consistent rulemaking and consistent enforcement, but AMLA will only be focused on the 40 largest banks.
That's true.
Right?
And not even all of them will be banks, probably.
So you have 40 actors in a very large financial system that will be supervised in the future by an agency that is still forming itself, because right now AMLA has a board, they have a director general, they probably hired a few people, they are not at capacity yet. In theory, it should bring real difference. In practicality, you take the people from national regulators and you give them a new logo and maybe more power. Let's see. Let's see what the appetite of AMLA is to threaten a license, let's say, for a bank. Because that's where the ultimate enforcement power comes from, right? Your threat as an enforcer is, I can either prosecute you criminally, or we can settle and call it a deferred prosecution agreement. You do what I tell you, and you stop what I tell you. And if you do so, I will not prosecute you, or I'll threaten your license, which has been done on more than one occasion by US regulators, which is a very big incentive for somebody to do as the regulators wish, right? Will AMLA have the political power to do that? I don't know.
Yeah, it's very interesting speaking about this, because we speak about you speak about two very different approaches, right? The US being strict, even sometimes some can consider too quick in terms of cutting off banks of the dollar, having like immediate and very serious consequences, while in Europe we are speaking about regulations, we are speaking about overarching countries' authorities, and whether there will be fines or other actions big enough to force the banks to do significantly more. Which approach works better in your opinion?
Well, the US also has the approach of fining financial institution and enforcement actions, right? I mean, having been a regulator in the US, I can tell you the enforcement action does not come because the regulator walks in on Monday, finds shortcomings on Friday, and then comes the enforcement action. Normally, there's different warnings, unless you do something very, very wrong, that a regulator will give you or give management of the bank to change policies, procedures, people, processes, etc. Right? If you just say, thank you for the warning, let's hire a consultant. What do you think, consultant? Everything is great. Here's your report, pay me a little bit of money, you have nothing to worry about. Regulator comes back, there's been no change. Well, of course, it raises to a level of an enforcement action.
Right.
Are the fines big enough in Europe? That's a question for the financial institution. What would get the attention of the board, right? That's been, for example, the challenge with the main regulator in Mexico, the CNBV. If you look at the historical fines being issued, they were in the neighborhood of what I would call a parking ticket, $20,000, $50,000, $100,000. It's cheaper to pay the regulator than effectuate change in my bank if this is my fine exposure. If you add a couple of zeros and you start getting 20 million, 100 million into the billions of dollars, it should get the attention of the board. But right now, the level of fines in Europe is the cost of doing business.
Yeah, I fully agree with you. It was already a few years ago, but we spoke with a small bank in the region, and we were explaining to them how they should improve their defenses with the systems. And they fully agreed that what we offered them would make sense. But a director from the board came into one of the meetings, asked about the budget for that, and simply said in front of us that, okay, a fine is smaller than the investment amount needed. And that was the end of this conversation.
Look, it's similar to what I would call the traffic fines in Europe. If you go too fast, in Europe, what is your fine? 25 euros, 50 euros, 100 euros? The first time I got a speeding ticket in the US, I had a European mentality, and I'm like, how much is that going to cost me? And the answer was $350 for going 10 miles over the speed limit. And I'm like, okay, well, yes, I will go to court for that. So it's a different type of mentality that the level of the fine sort of needs to drive action.
Yes, yeah, that's true. And you have experience about the fines as well, moving between Vienna and Budapest quite a lot. Okay, so let's speak a bit about switch from geopolitics to what the banks are doing and what technology can provide. So in your tenure in the field, you were there when they started, most of them started to implement the first monitoring systems.
Right.
Can you tell us some stories or your memories about how that conversation looked like?
Well, the story was always the software vendor said, we will come. It will be the silver bullet for all your needs. Beautiful PowerPoint presentation. It will be implemented in 3 months. The reality was the implementation took 2.5 years. Half of the scenarios didn't work. Half of them were designed poorly. And the bank had a system that produced some outputs. And as the regulators got smarter, they said the system is not adequate. Upgrades to a newer system. So with every enforcement action, there's this upgrade to produce more.
Yeah.
More is not always great. If you look at output versus, let's say, a client being shut down, reported to the national authorities, or just simple a suspicious activity report being filed. So it's been this lots of hype when regulators said you need an automated monitoring system. Lots of software companies, some faded, some merged, some evolved. At the end, it's a tool. And a lot of banks, in my opinion, forget this is a tool and use the right tool for the right job, right?
That's absolutely right. We have been doing this also, like implementing software since 2007, 2008. We have seen these promises, but also, of course, we have seen some evolution about even back then moving from spreadsheets to monitoring system as well. But then for quite a while, the technology didn't change a lot. Right. And now in the last few years, it's fundamentally changing again. Or maybe you will tell me it's just a hype. I'm pretty curious about how you see AI changing anti-financial crime technology.
Look, if deployed correctly, we've been using machine learning since probably 2015, 2016 on our projects.
Yeah.
We didn't hype it as AI. We just call it machine learning or automation. Right now, I think a lot of it is hype. The regulators are not opposed to it.
Yeah.
But they want you to explain them exactly how the model, how the algorithm, how you train the algorithm, etc., and why is it correct. So a lot of financial institutions, once they get over the hype phase, they don't fully roll it out. Because the answer will be, well, right now I have a system that has been accepted. Yes, I need 100 people to deal with the output. Do I want to invite regulatory scrutiny?
Yeah.
Or do I want to continue sort of surviving without headline risk and without big fines? Or management said we will go fully AI cut headcount. Those implementations generally also don't go the best way, so to speak, because then headcount fades, your model doesn't perform as you intended, and you end up with essentially a failed project after a lot of hype.
Yeah. You mentioned that you have been doing machine learning for a while. It's the same for us. We work a lot with the SAS systems, and they are by origin analytical systems. What made this hype about LLMs and Gen AI that regardless of the field of compliance, earlier you had to be a computer scientist or at least a data analyst to work with these systems, to configure machine learning system. You had to learn the language of the system.
Yeah.
And now in the last few years, the machines learn the language of people. So now everybody has like some opinion or some in-work experience, in-practice experience on how to use these systems. And with that, of course, the board, as you mentioned, has huge expectations.
Right.
And in a lot of cases, we see that too, that they start an AI transformation project in compliance because they want to show the results on slides. So I'm curious if you can tell us a few examples, like where you saw AI projects being successful and what was the right fundamental behind them.
The ones that I've seen that are successful is where you continue using data scientists and the people that speak the AI language to train the model. They're heavy on the analytical side. A lot of it has to do with network detection, meaning, let's say you have X customers within your bank, out of that a small percentage are bad customers. It can help you speed up the detection of who is transacting with who, whether you have different networks. The failed ones are those that are overhyped.
Okay.
In 2-3 months, we will have headcount reduction. This will be beautiful. Cost savings. You see a lot of flashy PowerPoints. And then the end result is, well, we created a model that will check for OFAC updates periodically. And our reaction was, well, you can subscribe to OFAC's notification. And by the way, you don't even have to, because your sanction screening system gets the updated SDN list pumped in automatically through the third-party vendor you're using. But that was the outcome of your big AI venture, right? And we shift from compliance to some other area where it might be less dangerous to deploy AI. The overhyped ones are generally those that fail. Those that start with the good old days, so to speak, analytics, and actually want to train an algorithm or a neural network, yes, those are the successful ones, but it takes time and it takes a different, I want to say, skill set and patience versus just saying, hey, I have an AI or Gen AI bot, let's deploy it, let's make a flashy presentation, and life will be great.
So, do I get it right that you believe currently more in the AI-related innovations in compliance that are more related to the back end rather than the front end of the systems?
You could use it on both sides. Most people focus on the back end because what's happening in most financial institutions, you have a lot of output from your sanction screening because you're doing name matching with a certain percentage match. So there's inherently lots of false positives. And then you're looking for suspicious activity that you need to report. Also, tons of false positive and very low yield the way the systems are currently employed. So when people think, can I replace entry-level analysts with AI? It's sort of senior management will say, oh, 20% cost reduction. Yeah. Compliance is not a bottom line contributor in most financial institutions. It sounds great, right? Is it achievable? Theoretically, yes. Has anybody achieved it? No. Look, I'll give you a prime example. One of my old firms also released a proprietary AI tool for internal audit. They released it twice, one in 2024, one in 2025, same press release, different CEO. I don't think anybody's using it.
It's interesting, and let me debate you on that a bit. Because why we see that there is more perspective or potential, at least on the investigation side, is exactly because of what you said, that machine learning has been with us for a while, and a lot of banks have already invested some money in backends, like decreasing their false positives, increasing the quality of their detection. So there could be, like for most cases, only small gains without getting the regulator angry. So then what can you do to optimize is not to decrease the number of false positives substantially, but to increase the quality of the investigation or decrease the investigation time. So with that, I agree with you that it's probably not the right approach, maybe yet, unfortunately, but currently it's not the right approach to replace people with AI investigators. But you can free up some time for the people. You can make sure that they work on the most critical cases, at least. How do you see the work of, if we look forward for 3 years ahead, how do you see an AML team? I'm quite curious if you think that it will fundamentally change, or it will be quite similar to today, or to what we had like 20 years ago.
See, when I started as a consultant, I thought after 2-3 years, I need to learn something different. Because if you think about AML compliance, it's very simple, right? You need to know your customer, and you need to monitor what your customer is doing. Make sure he's not on a sanctions list. It's more sanctions compliance. And if you notice something unusual, suspicious, report it to the national authorities, or get rid of the customer. So it's essentially know your customer, monitor the customer, do some reporting, and worst case, throw the customer out. Very simple, right? And every financial institution says they are doing it, but then why do you have all this non-compliance, or why do you have the scandals, the fines, the enforcement actions? Well, the customers are faster and smarter, or the bad guys, than most compliance teams, right? They don't want to work 9 to 5, they work 24/7, because they are the bad guys. So they optimize much faster than most compliance teams. How I see a team in the future? Look, I've used machine learning for a decade now. Do I see us using AI more for certain tasks? Yes. But there's also the value of judgment and experience that will still take some time to train those models on.
Yes, I fully agree with you, and especially the last sentence. I think currently we cannot judge these models for judgment.
Right.
But for some cases in the future, we can trade them, because what is judgment? Judgment is basically making decisions on a few rules and principles, in my opinion.
Right.
And as long as you can define that, you can expect the model to make some judgment. Of course, the question is the responsibility.
Right.
And we see that with the self-driving cars as well. It's not about technology anymore. It's about the regulation and who takes responsibility if they cause an accident.
Look, the technology is definitely there. Is there willingness of the compliance departments? That goes back to human nature, right? Right now, if you're the head of AML at a large bank, you have your own little empire because you're supervising hundreds of thousands of people. If you're now supervising AI bots, people will think in the hierarchy you're not as important, right? So part of it is empire building. The other part is, how do I explain to the regulators? How do I get regulatory buy-in? That goes back to the early days of transaction monitoring, right? Some clients bought something, some clients built something. The build was generally better than the buy in the early days.
Okay, that's interesting.
Because you're building from your own data. You're not taking a model that requires data in a certain way to operate.
Okay.
Right, which most commercial platforms, whether it's sanction screening or transaction monitoring, will tell you we need to ingest the data that way, ergo create a data staging area first so we can actually digest your data. And we hope we catch all your data because banks grew through a lot of merger and acquisitions.
Yeah.
There's lots of antiquated systems, some of them going back to the 80s or longer, that were never changed, right? And that is probably, those are the biggest holdups from seriously implementing AI.
That's a very interesting perspective. And as you mentioned, build or buy, I think this this discussion and this aspect comes back again.
Right.
Because with AI, everyone can have the impression, at least, that they can build their own tools and their own software. Do you think it will switch back a bit to building software internally?
In theory, it should, because look, in my experience, some of the best monitoring systems tailored for the specific client was developed by the client itself, right? But the other angle is too, something goes wrong, we have an enforcement action, we have a fine, what's the reaction of the board? If the enforcement action says the monitoring system was inadequate, okay, we a big bank, what's the best system? What's the Mercedes or Jaguar or whatever you believe is the best car of transaction monitoring system, so I can appease the regulators? We make the investment, the answer is we have invested into an industry-leading system that we're now going to deploy over the next 2 years. Yeah. It might be the biggest, it might be industry-leading. Is it fit for purpose for your bank? Maybe. Can you make it work? Sure. Will it work smoothly? Probably not. Look, I had clients that were running 2 parallel systems. And you're running both. One is very cheap, one is very expensive. We hate the expensive one. It's the head of AML compliance. Why did you deploy it? Head office in another country said it needs to be deployed because we told the regulators we're deploying it. So now you have it, now you use it, now you deal with the output. This is some of the internal interplay when regulators, board, senior management interact. And it's oftentimes not the best technological solution, but it's the best quote unquote political solution.
Yeah, it's very interesting how you put it about these actors making the decisions.
Because think about it, right? Take your top 3 banks.
Yeah.
One of them will have an enforcement action. The first thing that will happen is the board of the bank with the enforcement action will call their peers at the other, what are you using for systems?
Yeah.
ABC system. We need to buy ABC system. Why? They are using it. Ergo, they don't have a problem. We will tell the regulators we'll use the same. The thinking is we will also not have an issue.
I would like to add 2 factors to that. One is the size of the bank.
Right.
So, of course, if you are large, you have more resources to build a good system, and also you have more data, for example, if you want to build machine learning models. The other aspect, which I think it opens up a lot of possibilities, is the current state of technology, where you can have like modular systems connected via API, or in the world of AI, MCPs. And you can select what to buy for each purpose, what you should build yourselves. Yeah. And this, if the banks are smart and use technology in the right way, they can get the best out of the two worlds of building and buying. Let me ask you about, as we spoke about modularity, another trend that we have been hearing a lot about in the last 15 years is FRAML, or anti-financial crime together, merging fraud and AML in terms of processes, in terms of teams, and in terms of systems. But it's happening in practice in a very few cases.
It's not happening in practice worldwide. Everybody's been talking about it.
Yeah.
Should it be merged? Yes, you're looking for similar things. You back to empire building. The fraud prevention team will tell you, we're looking for something else. We're looking for right now AML and reporting of suspicious activities, backward looking. To me, the skill set is the same, similar, the same. The systems are very similar, the same.
Yeah.
And look, if your customer is part of a fraud scheme, you also should probably report that under the AML rules, right? So the expectation is you look at your customer holistically. Should those two groups, if you have two groups, work together? Yeah, definitely. Do they in practicality? No. Sometimes they don't even talk to each other.
Yeah, that's true.
And then a regulator will say, look, Sven is your customer. We received a lot of notifications for suspicious activity relating to fraud, nothing on the AML side. On your side, he's not suspicious, there's suspicious. Same client within the same bank, two different teams.
Yeah, this is still happening. I'm quite surprised by it, to be honest.
A lot of it is empire building and how the functions have evolved traditionally.
Let me go back to something you said earlier about the criminals working nonstop and the banking people working in regular hours in AML, for example. We are lagging behind, right? We are running after the criminals, and
Right.
you hear the statistics about very few % of the illegal money or the illicit money being caught by the banks. Will it change in the long term? Do we have a chance in this game against criminals, in your view?
You have a chance to report it post-mortem, most likely, and keep your institution safe, right? There's also, maybe to frame the argument a little bit differently, a lot of compliance officers seem to think of themselves as law enforcement, Interpol, catching criminal. That's
Okay.
not their job. This is law enforcement job. Their job is to identify the activity, report it to the national authorities, in hopes the national authorities will do a real investigation as law enforcement should. Whether this is happening or not, it's sort of not a banker's problem, right?
Right, but we all of us want to be part of something bigger. You know,
Right,
we have
right.
this feeling that we are fighting against the criminals, and but in practicality, we are just a small.
In practicality, the work is not sexy. That's the.
Yeah.
In practicality, you look at your system. It will say the system will say Sven did some interesting transactions because he sent money to Panama. What do I know about Sven? Nothing, because my KYC is lacking.
Yeah.
Because we have Sven's copies of his passport, we know where he allegedly lives, right? Maybe you ask for proof of address and I'll bring you a phone bill or bring you another copy of bank account. So you have the basic information. To me, that's not knowing your customer. And then you look at a couple of transactions and the thinking is, should I report it, should I not report it? Well, let's report it because no bank was ever fined for reporting too much, but many have been fined for not reporting enough that the regulator said, okay, this is clearly something that should have been reported. So there's a lot of noise feeding the national authorities, right, which is a frequent complaint of US regulators that so-called defensive SAR filing. The practical answer is, well, if I don't defensively file, you're going to give me an enforcement action, then I need to do a transaction look back by an independent party, which will cost me more money, and then I'll file. So the majority of things will be suspicious. For statistical purposes of, look, every year we file thousands of suspicious activity reports, ergo my process must be good, right? Because there's an output. Will you ever catch? Yes, but if you think of the world of finance versus international law enforcement collaboration, you and I can send money a couple of times across the globe, touching multiple jurisdictions where law enforcement will have to use their mutual legal assistance treaties, and the money flows at the speed of light. Will you catch everybody? Yes, later on. And you can hope they didn't retire in a country with no extradition to where you're trying to prosecute them.
Yeah. So what I get from you that we still, most of us are focused on our job in this long process. We are still catching up with the criminals, but there is a whole meaning to that because at the end, most of these cases hopefully will have a consequence.
Maybe, maybe not. If you look at real estate as a vehicle to launder money, since I live in Miami, there's no secret in the mid-'80s, Pablo Escobar and his friends from Colombia contributed significantly to the real estate development in Miami. That's all in public realm, etc. If you look at a change in the skyline in Miami over the last, let's say, 10 years, it's impressive. The question is who can afford the real estate and why is so much being built, right?
Yes.
Which it happens to be an unregulated sector, largely. So suspicious activity reporting is non-existent. And yes, it's one of the loopholes.
Yeah, you can look at some of the neighborhoods in London as well. Before we wrap up, I would like to ask your opinion about a few topics, but very quickly.
Okay.
We call this the quick takes. So I will give you a statement, and I will ask you to give me like a score between 1 and 5. 1 means that you fully disagree, and 5 means that you fully agree with what I'm saying. So the first statement is that AI in compliance is still hype, mostly hype.
I would say 3.
Okay.
A little bit forward-looking, because some financial institution puts the hype away and are actually working in what I would call the proper way on how you deploy new technology.
Okay, fair enough. The second one is quite close to that. My statement is that in 3 years, AML investigators will directly work only with AI.
I'd give this a 2, mainly because of the time frame.
Okay.
And because of the empire building that's going on in banks. Because if you oversee a team of investigators, right now you oversee hundreds. Then you will be overseeing 2. Your role will not look that important.
Okay, fair enough. The next one is about crypto, which we haven't spoken about. And in the next few years, crypto will be the largest financial crime threat.
I'll give this a 3. It depends on the crypto actor you're working with as a traditional financial institution, and on the safeguards that you build if you want to launch your own crypto as a financial institution.
Okay. With the fourth one, I will go back to our original topic about FinCEN and the dollar as a weapon. And the statement is that in the next 2 years, a major European bank will get its FinCEN treatment.
I would agree with that. I would give this a number 4, probably. I would agree with that FinCEN will find some misconduct at a major European bank. Why do I say that? European banks are conduct for activity from Asia, Latin America, Africa, within Europe and the US, right? If you're clearing in dollars, which is what most international banks forget, FinCEN is your other de facto regulator besides your national main regulator.
Okay, let's see what happens. And my last question is about the big picture in general. So the statement is that we are in a better shape to fight against financial crime than we were 10 years ago.
I'd give this a 3. We have more tools.
Okay.
We produce more output. Certain things have moved faster because we're no longer using that much paper. We're now much more electronic. Has the enforcement caught up with the speed that the bad actors are working? I don't think so. If you look at the estimates for the United Nations puts out in terms of the size of money laundering globally, and you do the calculation, you're looking at the economy of South Korea as a whole, as the South Korea GDP as being the amount of illegal funds estimated to be flowing through the financial system every year.
Okay, that's a good wrap up. Sven, thank you very much. It has been a journey in time, starting from more than 20 years ago, a journey around the world, starting from Guatemala back to Europe. You have truly amazing and extensive experience in this field, and thank you very much for sharing that with us.
No, thank you for having me. It was a pleasure.
If you are interested in similar episodes to learn more about how you can utilize AI and technology to fight financial crime, please subscribe.